Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Galaxy Surfactants, which is a decent chemical company. So let's understand about the business and let's understand whether you should invest or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Galaxy Surfactants, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It help you also ask me your questions on a greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term and long-term call on stocks and markets. And you can ask me questions on a daily basis. For detailed market or company talk or one-on-one discussion you want to have about the stocks you're holding, you can directly email me and we can work things out. Now about the company, Galaxy Surfactants was established in 1980 and they provide raw material to most FMCG companies and mainly chemical products to most of the FMCG companies. So it's like a consumer company altogether. The clients include Colgate, Henkel, Himalaya, Dabur, etc. Spread across 75 countries and not only here in India. Brilliant play on India consumption if you want to play. 65 patents given in last 20 years to the company and the market cap is around 4-5 thousand crores. If you look at the financials, and these are Q3 FY21 numbers, so sales went up by around 8%, but profit jumped by around 71%. It's a low debt company, and the profit jump was because of the cost efficiency that helped the numbers. So you can say many of the costs reduced, and company really focused on operational efficiency and reducing the cost. A decent dividend payout, return on equity of 23%, and operating profit margin of the company is around 15%, which is decent, and according to you can say industry standards, nothing extraordinary but not bad either. If you look at the performance of the stock, then the stock fell sharply last year in February, March. Numbers have been robust, has recovered smartly in the last 1 year and is surging at the moment. So it has done really well over the last 12 months, although it fell very sharply between January and March of 2020. The return ratios are pretty good and sales and profit growth are seen in the company, and look at the profit growth that has shown in the pandemic. So that really tells us that the company is set to do even better going forward once things improve. A low debt company, so there is debt but the debt is low at the moment. A high promoter and institutional holding with 9% free float is there in the company, and higher crude may spoil the party. So this is one thing about you can say most of the chemical companies, that if crude remains high or oil prices remain high, then it is extremely difficult to see most of the companies whose raw material is crude to do well. So this is one of the biggest threats that this whole sector has. But the growth will take sales higher. I think sales is getting better, and they have very good rapport with their clients globally. So that is also good. One thing I want to mention here is that the company's margins are not that great. So their margins in the vicinity of 4-5%, similar to most of the companies in the electronics domain as well. So here is also a threat that if they cannot have a pricing power and they cannot negotiate pricing and margins, then that is a cause for concern as well with the company. Why I believe still it is a buy on decline is that it is a market leader in its particular space. So it has done reasonably well, and it has done pretty well before its listing as well. So it has been consistently performing and will outperform as economy recovers. Once economy really recovers, especially in the third tier cities and the rural places, things will really get going for the company. A good quality mid cap firm, you can take it, and it's the management is pretty good and strong, and valuations looks like it is stretched now after such a move. So wait for very big red days in the market or very bad days in the markets to get into the stock. Let it dip 10 to 15% to accumulate. If you look at the technical, then there is strong support around the 2000 levels, and the 200 DMA is around 1900, 1920. So 2000 is a strong support. I want it to just go down by around 10%, around 2050, 2100 would be very good levels to get into. Currently above 23, 2350. So I think even if it goes down 5 6%, that would be better, because 2200 looks a very good short term support. That's where one can accumulate big time. I think stock is stretched at the moment, so there could be some correction. If not price correction, there would be time correction for 2 3 months, 8 to 10 weeks. The price doesn't go up or down, so that may happen. So what needs to be done? I believe that buy on major declines, buy on days when the market really falls, or buy after a 4 5% market decline, and that would be a good opportunity to get into. Keep track of numbers. If numbers dip, then you need to be careful because the crude prices are high, so that is a concern. Have a good 4 5 year view over a 5 year period. If things really go right, this can give you very decent returns and have less than 5% exposure in this stock. So this was my video on Galaxy Surfactants. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.